Nagarathar Chamber of Commerce. Sail to prosper.
I'm a bit of a manic depressive. When things are good, I can't see anything wrong. And when things are bad, I can't see anything right. So I will give that particular as a caveat. So therefore, that's something. And the other thing that will happen is I think the globalization is going to slow down quite a lot. We're going to have localization, and that's it. Now, what should be our investment thesis at this particular point of time? I have been saying for some time that over the last 10 years, the Indian stock markets have not given great returns. I believe if you'd done an SIP, you would have probably got 2 or 3% and so on and so forth. So it is the buy and hold strategy that we've always been talked about, and which Warren Buffett did, was fine when the markets were cheap and the Indian markets were growing, Indian economy was growing. In good old days, let's say in around 98 or 99, I could buy a company growing at 20% at a single digit P. Now the situation has been reversed. The company is available at 25 or 30 P, but it's going at 7 to 8 this thing. So if you see the top richest people in the world, in Forbes magazine or any of them, in the top 200, there'll be a lot of hedge fund managers. None of these hedge fund managers are fundamental players. They are positional traders who have taken a macro position on something else. So therefore, buy and hold may not work in the near future for two reasons. A thesis emerged from the fact that, look, we bought a good company, and in 5 years' time or 10 years' time, it will become a much bigger company. India, we were investing all in India with the hope that we are a $2.5 trillion economy, and in 5 or 7 years, we'll be a $5 trillion economy. I'm not too sure whether that would happen. And therefore, if you want to invest, you've got to find different ways of investing. But this old method, when markets were cheaper, you could get a Hawkins Crooker or TTK Prestige with market capitalization of 100 crores or 400 crores, or Emaraja battery again 200-300 crores. Those were difficult times. Indian markets have been discovered. Indian markets are overhyped, and therefore never invest in overhyped markets. You see, the general view is that, look, India's growth rates are the highest in the world, 6%, 5%. Firstly, that's debatable. But there have been extensive studies done that countries with high growth rates, their stock markets are not necessarily the best investment, and it's counterintuitive, but it is true. And the reason for that is very simple, because when a country is growing at a very fast pace, it becomes a glamour country, and therefore, regardless of the valuations, people come and invest in that particular country. And therefore, India is not necessarily the best place to do that. We are in deeply turbulent times, and this is investing is not a gamble. And I think we need to be into the harbor at this particular point of time, move into a lot of cash, and asset allocation is important. I have no idea, to be honest with you, would equities be the best asset class, or the real estate would be a best asset class, or gold will be a best asset class, or whether investing in America or China would be a better asset class. So what am I doing? I'm predominantly investing to gold. I've been also investing in USA, the NASDAQ. I've also been investing a bit in China, and also I've been investing somewhat in India. And the sector that I have picked up there is predominantly pharmaceuticals. It happens to be the flavor of the season. And I do believe that with the current crisis that is happening, if and when we find a new pharma drug for coronaviruses and all the other viruses that may follow, the manufacturing will have to be done in India. So therefore, I've been moving heavily into the pharmaceutical stock. A little bit tricky because it's a red hot sector, and you should not be really investing in the red hot sector. So that's what I've been doing. Sectorally, let me put it this way: real estate, I see the slow, people's individual balance sheets are going to be highly strained, and therefore they are not going to be buying a lot more real estate because they just don't have the money. And this is going to have a huge cascading effect. Most builders in India are highly leveraged, and therefore they will go belly up because they don't have the money. So therefore, real estate is in fact one of the largest employers, and they also have a bigger problem. The majority of the migrant workers who have gone back were the people who were working in the real estate sector. How the hell do you go ahead and revive this particular sector when there are no people, there's no money, so therefore real estate sector is dead. The next sector is automotive sector. Here there are two differing viewpoints. One is the fact that, look, since people don't have the money and their balance sheets are stretched, they may not buy two-wheelers or they may not buy automobiles. On the other hand, there's a counterpoint to all this, which is the fact that, look, because of social distancing norms, so people will stop taking a shared auto or a bus, and therefore everybody would go ahead and buy a two-wheeler or a four-wheeler so they can maintain the social distancing norm. On top of that, you've got to put this particular thing that work from home may become an important way of working. So therefore, automobile sector remains a mixed one, but I don't see a major boom happening in near future. Yes, we can have, scrappage policies. Indians just do not have the balance sheet at this particular point of time that they can buy new cars and new this thing. So it would be, very difficult in case we were to bring something of this nature when everybody is struggling. So therefore, what would happen in all this is some of the best and some of the largest companies are going to come under tremendous strain. I mean, I can't see a scenario that in next 6 months or 1 year, the Tata Motors commercial sale will shoot up like anything, or Ashok Leyland sale will shoot up. And these are all hugely leveraged balance sheets. And therefore, they could get into a reasonable amount of problem all over the world. I mean, it's not that in America, they will start buying the most fancy cars. No, it's not going to happen. And therefore, it's going to be a very, very tricky situation. I mean, I'm sure, the biggest group that we have is Mr. Reliance Industries. He's hugely leveraged. He's borrowing another 25,000 crores. Let us look at his cash cow has always been the refinery. If there's no demand for petrol products, he could be into deep problem. And that particular problem is going to therefore spill over the banking sector. And therefore, I don't think any banks are safe today, however careful you might be. And even if you have lent carefully, they are not going to find anybody good to lend to, because all business models today are suspect. I run a debt-free company. I don't know whether I'll be able to survive for next 2 months or 3 months. And this is the general condition of the dairy industry. And this has, milk is probably the single largest commodity in India. And therefore, if our rate of procurement are going to go up, it's going to have a huge impact on the rural economy. Similarly, because the consumption of food items is no longer as high, because we are all leading a far more, it's a simpler life, it is going to go down. So it is not fair to say that the rural economy is going to grow up at a fantastic pace. I don't think so. I don't see tractor sales going down. The general mantra is going to be, let us save cash. We could have a rainy day ahead. And therefore, I think consumption would slow down quite a lot. So that's it. Tourism gone down the drain. Hoteling, most hotels are leveraged. As it is, they were not doing well. Their balance sheets were stretched. Their profitability was stretched. And now with zero occupancy, where the hell is it going to go? Airlines, the traffic will drop very, very sharply. So therefore, that just leaves us with 2 or 3 things, which is the pharmaceutical, the gold, and maybe, I mean, you can't write down. The Indian institutions have let us rather badly. You had a judgment from Supreme Court of India saying that the private sector labs will do tests free of cost. Now, please explain this to me. If this logic is saying there's an economic emergency or a medical emergency, where the hell are they going to find, if this costs 5,000 rupees to do so, they will all go belly up. By the same logic, tomorrow they could come around and say that all hotels should give rooms free for the coronavirus infected people. I think we really do have a serious institutional problem here. And, I read this interesting bit that somewhere after the Second World War, a senator in America mentioned this, that listen, over a period of time, the economy will be all right. And there was a guy called, somebody, I forget his name. he said, listen, people don't buy in the don't eat in the long run. They eat daily. And therefore, if you do not take quick and sufficient measures, you're going to have a lot of social distress. Or we as a society were absolutely inadequate when these migrant workers were going home. These were heart-rending scenes of people carrying families of 4 and trying to walk 700 or 1,000 kilometers. These are really desperate people. I don't think we've seen anything like this since the partition. So therefore, we as a society have failed them. And I think the Indian economy, and second thing, let me also say one more thing. We as a society have also got to recognize that the poor people are suffering in what we're talking about. You and me will live because we believe in social distancing. But ask your driver whether he can do social distancing. He probably lives in a one-room apartment and 6 people live there. It's very, very difficult for them to do so. We have a whole lot of people who are working as Swiggy and let's say Ola or Uber, who are unemployed completely. Where are they going to go? They were living hand to mouth. Therefore, we have a serious problem. So, generally speaking, pharmaceutical, gold, global, America, China, little better than India, and in India, pharmaceutical. We don't know the timeline of this entire thing. The timeline is not going to be decided by me or you. The timeline is going to be decided by the virus, as Andrew Fauci said, that we are unable to decide how long will it take. Will it be over in 15 days' time? I don't know. It may take 2 months for it to do that. The other thing that is going to happen is that all of us are going to start wondering the futility of life. And therefore, if we had a fire in a belly, that fire was burning hot, it's going to be simmering now. So the people who want to take risk will say, listen, let me not take risk. And therefore, that's something which will happen. To conclude, I would only say this thing, that, what Einstein said about theory of happiness. And this is when he went to Japan, and he said that he was staying in a hotel and somebody came to deliver an article with him. Nobody knows whether he tried to tip him, and the Japanese fellow refused to take the tip, but he wrote on a small paper his theory of happiness, and I think that's something which would be worth considering in these turbulent times. A calm and modest life brings more happiness than the pursuit of success combined with constant restlessness. This is Einstein's theory of happiness, and I think we should look at it very closely. This particular piece of paper was recently auctioned for $1.6 million, and that's it. So, but this is my view of this thing. I remain quite pessimistic about it. But on a more optimistic note, I would just quote a Persian proverb, this too shall also pass. So let's hope it passes and we are back to more optimistic times a year from now. And I'm absolutely wrong. Thank you.
Thanks, Rajiv. I think you raised some very serious concerns at the same time. Thanks for finishing on an optimistic note here. I still have to ask you a few questions that people have, even though it might be in various with what you've been talking about so far. One is people have been asking about timing. So is it that the virus is more under control in India than abroad? If that is so, then what is the time frame? When do we start looking at buying stocks here? Maybe those particular stocks that you've already called on. And also, is there a different strategy to adopt for global stocks than Indian stocks? Because we have a lot of people from abroad also on the conference today.
I think the fact of the matter is the days you got to be the nimble guys are the ones who are going to be winners. So you need to see the data point virtually every week and then take a view. I mean, I think somebody has been saying this, that bulls and bears are not going to be the next winners. The hares are going to be. And therefore, you've got to be very, very nimble in doing that. I don't have at this point of time sufficient data point. I'm hugely into cash and pharma and gold. And therefore, I don't know at this point of time. I think we need for some more data points to emerge. But my reckoning of the market is that while most businesses may be available substantially below its replacement cost, but the earnings of these businesses are extremely debatable now. The business models have changed. I don't see the cement companies coming up and huge demand for cement developing in the next thing. India's balance sheet itself is hugely stretched. And therefore, I don't see, I could be wrong on this, but I would wait for more data points to emerge. At least to that extent, as far as America and China is concerned, China seems to have consistently, has seemed to have contained the coronavirus in a very significant manner. And I do see China economy becoming much bigger than the America economy in a time span which is smaller than what we had earlier anticipated. While America still has, government which is not so this thing. But I will never rule out America because it's a very, very innovative society. So therefore, my choice would be, as I said, gold, China, America, and India, then followed by India. India particularly not because it's a country, because you know Indian stocks better than you know the American stocks. And that's it. Yeah. So therefore, let's say an American company, they control an intellectual property right, which is very, very hard to replace. So the moats are far, far higher for the American company. We don't have those moats. And Indian, there've been a lot of movement towards, let's say, Hindustan Lever saying, look, the consumables, consumer goods will be consumed. But I don't think that people are recognizing this, that when our income levels go down, we will do down trading. And therefore, while that may be a safe haven, there's a particular price that you can pay for that safe haven. But because that's the only game in the town, everybody is buying Hindustan Lever, and the prices are becoming more loftier and loftier. And to a certain extent, that's equally true as far as pharmaceutical is also concerned.
Yeah. Another question, Rajiv, on the rupee. Now, the currency, the strength of our currency will service US dollar or other currencies. How do you see it in the near future?
To be honest with you, my call on gold predominantly has been on this, that Indian currency will keep on getting devalued. Our exports have not risen over the last 8-9 years. And there is a general viewpoint because a lot of foreign exchange money was coming into India. Therefore, Indian rupee was being maintained at a certain level because, FIs were investing. Now that they're not investing, and remittances from foreign countries will come down. And therefore, most developing countries, the growth rates have come because they've exported like hell. And therefore, India needs to export and export like hell. Therefore, it's a very good thing that in many ways the Indian rupee gets devalued. But for us as investors, we need to buy that this will happen. And therefore, gold is one option. And therefore, also exporting companies would be a great option. But unfortunately, as far as exporting companies are concerned, you have something like software companies. I don't know whether the American companies' budgets, when they are so strained, whether they would invest very heavily into more software companies. I don't know. So therefore, my little safe haven at this point of time is pharma, and I could be absolutely wrong on that.
What is your target for gold, Rajiv?
To be honest with you, again, like most things, there's a point, there's a counterpoint. It's been brought to my notice that Russia has stopped buying gold. The central bank has stopped buying gold because they don't have the money. It's anybody's call, but some friends of mine who know gold far better, they're talking about $2,000 an ounce. It may happen, it may not happen. I have no idea. But consumption in India is dropping off very, very sharply. But that does remain a safe haven. And I therefore don't see American economy picking up in a very significant manner very quickly. And there's an election ahead. And once the election ahead is there, we don't know, the Democrats may not be so stock market friendly. And therefore, American markets could tank, and therefore, a lot more money may come into gold. So I'm reasonably okay with gold, but I would not, it should be part of your asset allocation, but not the only game in town.
Permit me to go back and forth between the two of you from now. Uh, can I just point out this question to Govind?
Yep.
Yeah. Can we have a list of investments, shares that you've purchased in the last period? I mean, during this COVID period, what would be the shares that you would have picked?
Well, most of the shares that we own, we pick up the same shares because it's very difficult to, study so many companies today. There are very few companies which we have really studied and we have concentrated holding in those companies. So when the market crashes, we buy more and more of those companies. I don't mind sharing. We bought a lot of HDFC Bank almost at the lowest levels. And we bought some Sundaram Fasteners, Ramco Cements, again, very close to the bottom till now. But I'm not saying that this is going to be the bottom. Huh? It can go down even more, much more than this. And as Rajiv rightly said, things are so bad, we don't know when this is going to end. So it can go down much more also. But, we are not invested fully. So we are invested about 40% of the money. So we bought a lot of Bajaj holding shares at, again, below 1500 is very, very cheap stock. It owns Bajaj. We bought Bajaj Auto also. And as Rajiv rightly said, today, the two-wheeler market and four-wheeler market is going to do extremely well in times to come because a lot of people will not prefer going by public transport. Second thing, if you see companies like Maruti, of course, I didn't buy that. I missed it out actually at $4,000. See, Maruti, if you take Maruti, they have 1,600 crore cash with them. And today, if you see the number of two-wheelers which are made, it's about 2.5 crore two-wheelers are made every year. And normally aspirations of people is to move from two-wheeler to four-wheeler. So let's assume even 5 or 10%, if 10% of the people over a period of 2-3 years want to, want to upgrade themselves to a four-wheeler, then, the number comes to 25 lakhs, which is perhaps the production, which is overall 100% production of India today. So that is one thing. Second thing is also, there is also a possibility that, people may not have enough money to buy these things, two-wheelers and four-wheelers immediately, because there have been a lot of pay cuts expected, in a lot of salaries and all that. Plus people want to conserve. So there is possibility that a good amount of people will go in for second-hand vehicles. So I think second-hand vehicle market will do well. And if that is doing well, OEMs may not do well, but if you take the, kind of products like battery and tires, which are always changed, you need to change them. So those things will do very well because they will do very well in times to come. So, and also with crude coming down, it's a biggest blessing. See, today in India, basic requirement of ours is crude and cheap money. Now, globally, both are available, both are very cheap. Crude at these prices, or even little more than these prices, means close to $50 billion saving for us. That's not small money, $50 billion. And looking at the inflation and recession in some of the places, it doesn't look like that, oil is going to go up very steeply to 80, 100 and all that. The second thing is money. If you see the money with the global way the America has been printing notes and giving the stimuli, it means something global stimulus will be about close to $5-6 trillion. So there's a lot of money available in the system. So that is why if you see US market, the way it has gone up. Now in US, all the factories of automobiles are closed. Most of the factories are closed, but still the market is going up. It's because there's a lot of liquidity which is being pumped in. Fed is going to buy even the junk bonds. You imagine. So, definitely there's a lot of potential. Only thing what I'm really looking forward is our government should not screw it up. Government should really go whole hog and make the best advantage of this cheap oil and cheap money. And yeah, coming to the other industries, if you take rentals and all that, I think for some time it may take problem because a lot of people will not, working from home has been pretty good. I was talking with one of the corporate leaders and he said it's pretty good. Even after this COVID issue is over, at least 30% of us are going to have working from home. So that is going to bring down the rentals for some time. Eventually, I think what will happen is in real estate, if you take the very high priced places, and if you take very low priced places, I give you an example. If you take a prime place, it will cost 25,000 rupees in a prime area here in Chennai. But if you go to, let's say, Sri Perumdur, it may be so cheap. And if you go Kanchipuram and you go further down, it may be even more cheaper. If you go to some places down south, it may be more cheaper. And now, with work from home and with technology, a lot of people may prefer, okay, we'll work from home. So the difference, so much of difference between the very, very high priced real estate and absolutely ignored real estate, I think that is going to come down. The difference is going to come down. That is my personal opinion. And yeah, that's it.
Govind, I think several questions that have been answered in some of the points already made. Before I pose the same question to Rajiv about the stocks invested recently, I'd like to just touch upon one point. HDFC recently seemed to have attracted investment from China. Like, there have been a lot of concerns about Chinese investments across the world. Do you think this is going to have any impact for us in the future?
No, see, basically, HDFC is owned by people all over the world. And Keki Mistry, the MD of HDFC, came and clarified it. Already, Bank of China, PBOC or whatever it is, they owned 0.8%. Now they've added some more shares, so they've come more than 1%. So that's why it's reported. And see, today, look at it this way. I mean, if you take HDFC or HDFC Bank, these are the companies, they can raise any money globally, throwaway prices. Okay. And also, if you look at, their lending and all that, it's been very, very conservative and very mature. They're the pioneers. So what will happen is a lot of companies which are not doing well, like India Bulls and DHFL and a lot of other companies, I know some promoters, I don't want to mention them, all these kind of housing finance companies in Bombay, couple of brokerage houses and all that, they are in deep trouble, So what has happened is basically in housing, the pie has become very big and number of players also increased. Now what has happened is a lot of players have collapsed. Okay. So the resultant people are going to enjoy the whole pie. So that is why my feeling is HDFC and even Bajaj Finance is also going into housing in a big way for the next 5 years. So a couple of these companies, they will do extremely well. Okay. Housing is definitely needed for anybody and everybody. Government is also coming out and government has to give, our Prime Minister has got a plan of, home for everybody in 2022 and all that. So I think, quick, best way is, the housing finances business is not going to die down. Things are all temporary now, in my opinion. Because all people have aspirations to have their own house, whether it's far off place or whatever it is. So I think the housing will do. Housing finance company, especially the solid ones, you should buy. I mean, I'm not saying that everybody will do well. A lot of them are going to go get fat. A lot of them, one housing finance guy was proudly saying, I've given to 164 smaller people, so my risk is very much distributed. But all the 164 fellows are going to fail. So that is where the strong companies are going to become very, very strong. And these are all the valuation game. Today, Rajiv ji correctly mentioned that, it will take a lot of time. And I also pray and hope and pray that this passes. But maybe 2-3 years down the line, you will find that these rates were pretty good. And from now, it can also come down a little. It's not that they won't come down a little. But then you should not fear about it. At this level, you should be greedy, not fearful. That's my personal opinion.
Thanks, Govind. Rajiv, we'll come to you now on the stocks that you have invested.
Yeah, I wish I shared his optimism. That's all I can say. I pray and hope that that's right. Yeah. I remain pretty downbeat about it. I do believe individuals' balance sheets, we could have India's, the prime lending, whatever they did in America. So we could be into deep trouble most banks could be in deep trouble. I tend to agree with you that maybe HDFC Bank But when things are so bad, it's very hard to imagine that you had a previous norm that, look, you will not have bad loans at all. You would also have bad loans. And therefore, however careful you might have been, things could get bad because people's jobs are not so sure. People are very, very worried that whether they will have a job or not. You see, everybody is talking about the fact that, look, March month salaries be paid, but everybody is waiting for this lockdown to be done and then say start laying off people. People in the software sector are very worried whether they would have a job. They're virtually unemployable elsewhere. So therefore, I think we are in deep trouble. And therefore, however careful you might have been in lending, because as real estate prices go down, therefore, the sort of crisis that happened in America, most banks will not be untouched. I mean, nobody is above when the economy goes bad, how careful you might have been. And unfortunately, Indian valuations, they don't see the income. There is a far more greater importance attached to the NPAs. And therefore, once a reasonable significant percentage of NPAs are shown, the valuations drop very, very sharply. And therefore, there are no good corporates left to lend, to be honest with you, because we don't know which business model is going to succeed. Can we trust in Tata Motors to survive? Can we trust in the Ashok Leyland to survive? If you take out the governmental support, is possible that even an industry as large as Reliance Industries or Adani could also come under tremendous tension. And therefore, it's hard to imagine that all these people were so careful. Then my question is, whom have they lent to? Lots of individuals who are salaried class, I don't know whether their jobs are intact there tomorrow or 3 months from now. So I don't know. Because if software exports stop in a significant manner, a lot of unemployment is going to rise. As it is, I don't know. I think CMI came with some data which is pretty drastic about the unemployment rate currently in the country. And we have not laid off people. We will all be trying to lay off people because we need to survive. So I hope I'm wrong, that's all.
We didn't get any names of stocks, Rajiv.
Okay, I told you I invested reasonably into pharmaceutical stocks.
Okay.
And I did not invest in a single stock. I invested in the whole bucket of stocks. Right. I also invested in gold, which is the gold ETFs, and so on and so forth. I also invested in NASDAQ, which is the Motilal Oswal NASDAQ, and as well as a bit in some China ETF and things like that. I'm trying to diversify my portfolio, and my single largest holding at this point of time is cash.
Right.
I'm not too sure about Bajaj Finance because, however careful you might have been lending, that was the old norm. The new norm, how many of those people will be able to do that? I have a fairly large investment in gold finance companies because I'm not very certain. Some of them have a microfinance division. And whether the microfinance will, gobble up the entire gold financing business, I don't know. And one of them sort of defaults on paying his loan, the bonds, you could have serious implications on this. So I think you're really having very turbulent time. Wait for it. Wait for the storm to settle down. Remain in the harbor at this point of time. And when you have calmer seas, go there. That's what I would do.
That's awesome. A couple of general questions that have come up. One is that we've been investing in SIP for a long time. Do we continue to invest in SIPs, or do we stop at this time give it a break? And also, or should we move instead to FMPs, fixed maturity instruments? What is your take on that? Govind, you can answer. I
think if you are continuing with SIP and if you have SIP with very good funds, I don't think there's anything to worry over a period of time as we expect this to pass. Because if you quit at this kind of a period, and then the big jump is going to come, 30-40%. So it's better to continue with that SIP. And depending on your, risk-taking ability, you can continue in SIPs. Otherwise, if you don't want any risk, maybe part of the money, depending on your age and depending on your, risk-taking capacity. I think most of the Chettias, your community, they are all risk takers, So instead of putting the money in fixed deposit, I'm sure they won't put in fixed deposit. They have better ways to lend it out, if at all they want to do lending. I think people should continue in equity. I think basically, see, what has happened is, over a period of time, if you look at the companies, some of the companies, and even some of the technology companies also, it is true that American corporates are going to take a beating. But when this kind of stimulus is given in America, Europe, everywhere there is stimulus, everywhere there are problems. The companies which are predominantly in America, they will get a beating more. And so a lot of more work can come to Indian companies. But again, in this, I will only say 2-3 companies only you should buy. Maybe you buy Infosys, maybe you buy TCS, maybe you buy HCL or one of this kind of companies only. Don't buy anything and everything, And if you look at, the kind of stimulus which is expected in India, see about 1.7 lakh crores they gave, which is about 0.5% or 0.8% of the GDP. America has, and others, they've given 10% of GDP as stimulus. So if you expect some more money to be pumped in here, it's going to be really helpful. And today, if I have to sell something, I don't want to sell when everybody knows that things are so bad. You should sell when things are very good. You can't sell when, everything is so bad. And then, at this time, you are close to the bottom, in my opinion. Maybe it can go down 10-15% more, but then, you can sell in a good market. I'm not optimistic at all. I feel it will take about 6 to 9 months minimum for things to stabilize, But stock market is a discounting animal. It discounts much ahead. So maybe you buy now, maybe 6 months down the line, when things start improving, you may not be able to buy at this kind of rates. And also, if you buy now, you should have a lot of money with you to buy. For that, you should have sold. You should also see tomorrow if they give a stimulus and if the market is going to go up 10%, very unlikely, But market goes up 10% from here, 10-15% from here. I would like to, take some cash again, and wait. So that is a kind of approach, I think it should have.
I think we are in really turbulent times right now, and I think both the speakers have voiced their opinions in very, very different ways. The same thing, that we are in turbulent times, and we have to wait for some time and see how things turn out. I think there was a nice comment just came up saying that when we have 2 experts, they will always disagree.
No, I don't disagree. I don't disagree with Rajiv ji. He's right. He's right.
I think,
but only
I think,
thing
Govind, what we expected is all of us turn up here and we'll see both your hands raised and say, buy this share, and we go and buy the share. That's all we wanted to do.
Mr.
So basically, I 100% agree with Rajiv ji. Things are so bad. He's in the industry, so he knows more than me. I only talk to the people in the industry, but he's himself running an industry. So he knows the nuances.
I think making money is going to be very, very difficult. Sometime back, something like $3 trillion of the word investment was in something called negative securities. And this was when things were better. So I think making money is going to be a very, very difficult thing to do. And therefore, that's what my view is. But I have been wrong very often in these sort of times. And I pray and hope I'm wrong this time as well.
But most of the money is made in bad times, sir. If you see in 1984, after Indira Gandhi died, things were so bad. And, a couple of stocks from those levels, MRF, Madras Cements, Dr. Reddy's, all these companies, they have done phenomenally well after that, McDowell's, it used to be now present United Spirits. So these are all the companies which did phenomenally well. They went many, many times from that time. So as you rightly said, this also has to pass. And at some point of time, I'm told that, in America, they're on an advanced stage of taking out a medicine. It's not a WhatsApp news. It's somebody who's in US, who's a professor of one of the top, this thing in, infectious diseases. He said very soon, by the end of June, July, you'll have a kind of a drug, not vaccine. You'll have a drug. So let's see, let's hope these things, don't do. And I really commend our government, though it has really hurt the industry for this lockdown. If otherwise things would have been extremely, extremely bad, if people would have been allowed to mingle, it would have been very, very bad. So it's quite good, they've done this. And let's hope for the best.
Thanks a lot. I'd like to thank both our guests for a very, very nice session. A lot of useful information and very well presented. I'd like to pass this on to the President for the vote of thanks.
Yeah, thank you. Thank you very much. It was an excellent session. As E.M. Khanna rightly said, when two stalwarts speak on the same subject, it's very difficult to even have a summary of points to say during the vote of thanks. So let us keep our fingers crossed, and I fully agree with Mr. Rajiv saying that this too shall pass. So we will hope for this too shall pass. And rightly said, we Nagarathars, a lot of people have invested in stock markets, and this is a time where we will be fearful and not greedy. We have been always conscious investors in the stock market, and we will continue to maintain the same practice in the stock market. And I take this opportunity to thank both Mr. Rajiv and Mr. Govind for giving us a wonderful session. And I thank E.M. Khanna for moderating the session wonderfully. And of all, I thank all the 232 participants who have been right through the session. Few people joined and left due to their time zones because they joined from US and other places. So 232 people who have been right through the session, I thank all of you. And let's see that this too shall pass, and we will see good times very shortly. Thank you very much.
Thank you, Mr. Ganeshan. Thank you, EMC.
Thank you, Ganeshan.
Thank you very much.
Thank you, Pal.
Thank you so very much. Wonderful session. With pleasure. Bye-bye.